brought to you by Tax Talent and Financial Executives International. My name is Jody Turkis, and I'm with Tax Talent. We are delighted to have you join us for this informative topic on aligning your tax function with strategic business operations. Now, a couple of quick notes before we get started. Each webinar attendee will receive a summary and a link to the full recording of this webinar later this week. We encourage you to share it with other members of your company or anyone in your network who's going to benefit from this information. We'll also include a link to the recording of our previous webinar in that email. Now, please note that this is an interactive webinar and your questions are very important. You can ask a question anytime by typing it into the question box, and we will respond to all of them at the end of the webinar, whether they are about these 6 questions or any additional areas. You can address them generally or even to one of our guest speakers specifically. So let's get started. Like most business operations today, the tax function faces increasing pressure to be more strategic, maximize efficiencies, and increase productivity without adding unwarranted costs. This trend is creating demand for a new type of tax professional, someone who can bring valuable business understanding on top of technical acumen. Now, the end goal is effectively to align the tax function with strategic business understanding to drive measurable value that produces P&L and cash benefits without increasing risk. On that note, I'd like to introduce our host, Tony Santiago. Tony has over 30 years of experience in tax recruiting and department optimization, so he's very familiar with the need for strategic alignment between tax and a company's business operations. So I'll go ahead and turn things over to Tony, and he can introduce our special guest for this discussion.
I'm truly excited to explore this topic because I believe it is one of the key attributes that separates average tax functions and leaders from those that are world-class. We are appreciative in having 2 individuals who are both viewed by their peers and the business community as being at the top of their profession. Tim McDonald has been with Procter & Gamble since 2003 as Vice President for Finance, Accounting, and Global Taxes. He's responsible for all matters pertaining to corporate income, transactional taxes globally. Supervises a staff of approximately 250 individuals globally in 34 countries. Over the last decade, Tim has brought a tax policy and legislative sensitivity to the tax function that was well ahead of its time. I had the opportunity of assisting his transition from a Big 4 firm into his first in-house corporate tax position at Baxter Labs. It was no surprise to those who knew him that he quickly moved up into the VP of Tax role. His transition into Procter & Gamble directly into the global head of tax function was impressive. As anyone in the market knows, P&G has a very strong culture of promoting from within. I believe it was Tim's unique approach at the time of focusing more from a business perspective as opposed to the traditional tax technical that separated him from the pack and landed him that role. Ahmed Roubaix is the CFO of Sitecore, a technology leader in customer experience platforms and marketing automation. He is a highly accomplished executive with extensive financial, operational, and global business management experience. He started his career in tax and grew into business roles many years ago, which will make the topic more interactive today. He has been a Chief Operating Officer as well as a Chief Financial Officer, always playing a significant role on the management team in building a high-growth and highly profitable recurring global business. Prior to Sitecore, he has served at Fortinet and Ariba, which was one of the top-performing stocks on the Russell 1000 during his tenure of management there. I remember pulling Ahmed out of public accounting back in the early 90s and placing him in a giant natural resource company where he also lived overseas, and years later, I placed him in a sizable manufacturing company. There was one consistent trait that I spotted early on in his career. While his pedigree included time at a public accounting national office and so on, he always was about business, with amazing passion and transparent accountability in those early days, clearly ahead of his time. I watched him operationalize tax and develop people into business leaders. Of course, it's not a surprise that he left tax long ago to actually run businesses and has done so on many scales. I'm pleased to have both of them on this panel as they bring a unique perspective and depth to this topic. Ahmed, the first question I have for you is, what are the pressure points of a business today, private or public, and how does the tax function play into those dynamics?
Thanks for the question, Tony, but before I get into answering it, let me thank you for being a constant visionary in the tax talent world, going back for 3 decades now and what you've done. And I appreciate you putting me in the company of one of the best tax officers out there, my good friend Tim McDonald. So Appreciate being on, and also I will answer all of these questions in a triangulated manner just based on the journey of my career across multiple sectors, different size companies, public, private, having lived overseas, et cetera. And the views that I will express are my own personal views. So with that as background, in terms of what are the pressure points, well, you know, we're living in a pretty dynamic time. If you look at the foundation of running a business as a going concern, the first blocking and tackling foundational block is making sure that you've got a healthy balance sheet, you've got a going concern, and you're continuing to grow. I'm not enlightening anybody. That is something very basic. Now, in 2008, 2009, the global recession called all of that into question, and whether businesses were capable of withstanding the balance sheet test across the public domain, private domain, across geographies, verticals, sectors. We saw a pretty significant meltdown in 2008, 2009. The good news is out of that came a new awakening, that we had to go back to the basic fundamentals of how to run a business. I think in tandem, what also took place is a new equilibrium of buyers and suppliers across the world. You know, the healthy stood, and many others went and had to reinvent themselves. That's actually a pretty good calibration. I think at the same time, what you also saw, what we all saw, is that the technology revolution had a second ignition, and admittedly this time a little more powerful and a little more lasting and impactful than what we saw in the late 1990s. And so as the developed world has gone from the agricultural revolution to the industrial revolution, where I grew up in the Midwest in Michigan, to now the technology revolution, which is where I live today in Silicon Valley. And that really is a pretty profound impact on how we are going to do business going forward. So if you look at the go-to-market for any business, it has significantly changed. And again, this doesn't matter whether it's a private company, public company, geographically in the developed world, in emerging markets, X vertical, X sector, go-to-market has significantly changed. And in my humble opinion, it's going to continue to evolve in the direction of technology efficiency. At the same time, new trends have evolved. So the way we think about business is very different. Buying behaviors are different. Buying patterns are different. New trends that have now become part of the way we do business, the cloud, mobility, big data, and so on. These are all new paradigms that came out of the world as it shifted out of 2008, 2009. So you put all of that in a blender, and again, you conclude, irrespective of what type of company you are, sustainable growth of your top line while managing your bottom line in cash is business number one. And it's the same foundation that I spoke about at the beginning of my answer, but it is in a completely new paradigm with far higher expectations for agility and efficiency. What does that mean for tax? I think it's actually terrific for tax. At the end of the day, tax is a significant expense, is a significant cash line item, and so it will always be a relevant part of a business discussion. Even for some, it gets discussed as below the line. At the end of the day, it's part of the P&L, part of the balance sheet, and as Tim will talk through his answers, you'll see the ever-increasing complexity of both direct and indirect income taxation across the globe, and it's only going to get more complex. In fact, I think the legacy issue here, which you touched on in your introduction, Tony, has been for the chief tax officers to decomplicate an innately overly complex world and get their management teams to understand and align in a direction that is of benefit to the management team and the ultimate shareholders, again, irrespective of public or private. And then getting their teams trained that way, much like Tim has successfully done at Procter & Gamble and so on. So in short, I think that's where we are in the business world today, and I think tax is highly relevant in the business world today, and it's about the leadership that you're going to hear about from Tim and how to manage that, and I'll elaborate as well from my angle, that will make the day for a tax function as we go forward.
You've both embarrassed me a bit, so I'll just give one person's humble kind of assessment. So it's not my company view, it's just a tax professional that's done this for 30 years. On the first question we're talking about, I'd give you a couple vantage points. One is, or two of them are macro, and then one specific to tax. Macro, most of our economies globally are slowing down. The U.S. is actually the most successful major economy currently running, and we're not running fully on all cylinders. And so what that's done for a lot of industries is put a lot of downward pressure on sales growth. And in turn, because the financial metrics drive us to earnings per share, it puts a greater pressure on cost containment. Regrettably for the tax functions, the world's getting more complicated at the same time budgets are getting tighter. And that really does require you to step up your game. And as I'll kind of allude to in I think our next question, the difference between a compliance shop and a value center is important in navigating the cost pressure paradigm. Because if you're merely a compliance shop, and I don't mean that derogatory, it's just value on a relative basis, then unfortunately you're going to feel much more of the pressure on the cost containment spectrum than if you are also creating a lot of incremental value. The second reality, external or macro, is that at the time of the financial crisis, personal bank balance sheets and government balance sheets were in pretty bad shape, and largely they still are, more so the government than the households, but there's over leverage throughout the system, and that puts pressure on revenue for the governments, and in turn they look to the source that's the easiest from their perspective, which is the corporate community. So from a pressure on the business, we have these both budget cost pressures and this increasing demand to deliver more revenue to the governments where we operate. And then lastly, and this is more to the tax function itself, because the EPS is tight, the premium on providing high quality earnings is the highest it's ever been. And by that I mean when you assess risk on the tax line, it's not a virtue to have excess reserves, because when you release those reserves, when the controversy finally subsides and it's clear, if you've misassessed the risk and were overly conservative, you release your excess reserve at a time when the earnings will not be counted by the street, and your CFO will not be as happy as if you could accurately, correctly assess the risk at the true expected value. So a little bit of future Ouija board insight into your risk and what you'll need in the future delivers extra premium for the company if you do it right. And in that regard, and I've spoken in other forums about the advantages of a transfer pricing strategy with advanced pricing agreements. If you can get a good network of rulings, and they're getting tougher to do, the advantage is your quality of earnings is more predictable, because you can predictably count on a government where you have a ruling to not have a tax controversy if you follow the ruling. So that requires, it translates into, for the same amount of cross-border transactions, you require less tax reserves because you have more certainty.
Ahmed, do you have any follow-up to this question before we move on to question 2?
Yeah, sure. So to the audience, let me add just a couple of points to demystify some of what Tim just said. At the end of the day, and for the other financial executives on the webinar, I'm pretty sure you would be fully aligned with me on this point. The point that Tim is making about the value center, and of course he will articulate in answering future questions that in delivering a value center, that is not at the cost of risk management, which he alluded to actually in his point. So it's about putting all of it in a blender and coming out with a true value. And to be frank, there is this notion, at least from what I remember from decades ago, that the financial executives or executives at large don't have the time or don't have the capacity to understand let me demystify all of that for you. At the end of the day, it's an expense like any other expense. So to the extent you can show value that is also risk managed, you can get the attention of your CFO and other executives. Now, you got to put it in very layman terms, much like anything else. And I'll disclose to you that most of us that run big businesses have attention deficit disorder, and so you've got 2 minutes to articulate your position, and that also helps you justify your budget and how you spend your money at the end of the day. And financial executives will always prioritize things that are going to deliver a better expense efficiency, better tax efficiency, and of course with utmost risk management. I think the piece that Tim is telling you about in terms of predictability, boy, I can't underscore that enough. As CFO of business and have been of public companies, when you're speaking to investors, you've got multiple items to cover, and tax cannot be a point of discussion, but it can be a point of pride and clarity in terms of the sell side guys building their models. And so a very quick touch point on here is my effective tax rate, here is my position, and by the way, because of my transfer pricing, planning, and so on, my risk is fairly predictable. In turn, as you build your model, you've got less to worry about. Boy, that is music to the ears of Wall Street. So please pay attention to that point. I think it's a very critical point. And so finally, when you tie it all together, at the end of the day, while yes, budgets are tight and they'll get tighter, and the business is dynamic, there'll be cycles up and down. But I have never ever seen it where somebody has a well-protected value on the table that doesn't get the attention of executives, including financial executives, and gets prioritized, because at the end of the day, it makes good business sense.
All right, I'm going to move on to question 2. This one's for you, Tim. What does it mean for the tax function to be aligned with the strategic operations of a business?
Well, I'll kind of answer it in a sort of a context historical way. And I'll premise this by saying you need to be the master of the discipline of and. So in the tax careers of yesteryear, most of the people that did tax were actually compliance folks. Typically it was a CPA background, and they largely did a reporting and analytics. They often did not have a significant tax rate advantage or even cash flow advantage, but they took care of the day-to-day, the minimum level of stewardship. And obviously that's not driving a lot of value, but it's a prerequisite minimum performance expectation. If you can't have good stewardship, you're not going to have a tax career. You then kind of, over time, saw the evolution of the tax leader become much more of a tax planner, a technician, and for probably 25 years, your typical tax leader was someone with an advanced degree who had a fair amount of technical acumen, and a lot of their planning was driven off what I would call low business friction. It means you delivered tax results on the tax line, but it often was divorced from the business and the operations. In effect, if you could figure out how to reduce the tax rate and get some cash flow benefit in that black box that you manage, that was considered a successful tax leader. A lot of things have happened in the last, call it 15 years, that have increasingly made a tax leader be more than just a tax technician. You need to certainly understand your risk. You have to manage it in a stewardship kind of way, but you have to demystify the black box, and you have to have increasingly more substance behind the tax result. So things like the codification of economic substance, BEPS, the rising ascendancy of NGOs, which are non-accountable groups who second-guess tax fairness. When I started my career, there's no such thing as a discussion about tax fairness at the corporate tax line, but that's now part of the public dialogue. And so these external pressures, which are now culminating in the BEPS project, really put a premium on having real economic pre-tax substance as the driver of your tax results. And increasingly, the synthetic tax result that's devoid of business purpose and substance is not sustainable. It's not low risk. It's got a much higher financial risk, and it's got a much higher reputational risk. And so what it takes to now be a successful leader is much more of a well-rounded executive who's grounded in the fundamentals of compliance and stewardship, the technical craft, but then needs to take it to a level where you can interact with the business and now function as a lever to help optimize after-tax returns. In a way, it's liberating because you no longer have to worry about, the tug of war with the business unit in trying to optimize just a tax line in competition with the business. That's not a good model. It's much better to provide senior leadership with optionality and explain the choices that they have and the risks that are associated with them, but then allow management to choose how to deliver after-tax returns. And to be honest, it's a lot easier to demand on tax if we are less reliant on the tax strategy to deliver more after-tax. That actually makes our job easier. But once you realize you're not responsible for making the tax line, the very lowest amount of expense possible, instead you're trying to help the business optimize the after-tax, it then becomes in some ways an easier job and also a more fulfilling job, because now you have much more space to work with management and help them evaluate decisions.
Ahmed, would you want to take a stab at this one as well?
Let me just a quick brief comment here. I'm going to go back to the word demystify. At the end of the day, I would say this is no different than any other expense line item in the business, whether it's logistics costs, supply chain, or whatever else. At the end of the day, Tim is right. I think it's about optimizing the efficiency and clarity of tax on the P&L as well as on the balance sheet, while managing risk in a model manner, meaning making sure that you still have your handle on the stewardship and the compliance, not only just with governing tax bodies across the world or states and provinces wherever you do business, but also with your independent audit firm. So it's a triangulated way of looking at things, and by being aligned with the business and helping drive the business, it actually brings the tax function, much like other functions in the business, closer to the management team in terms of, how do you think things through, how do you plan, how do you execute, and it becomes far more relevant. And all the other black box, highly technical stuff, keep that to yourself as a tax function and make sure you're doing an A+ job, because the guys sitting running the business are assuming that you're going to do that at an A+ standard.
I'd like to move on to question 3. What are the primary benefits of aligning the tax function with strategic business operations? And this question I'm going to frame towards Ahmed.
Well, I think it'll be a takeoff of my final comment to the last question. I think the first benefit, and these are not in descending order, these are in tandem, is risk management. When you're running a business and you've got multiple dimensions coming at you from the uncontrollable angle, meaning the macro, what your customers are doing and so on, to the controllable, how well you're executing across the business, the last thing you need is more risks to manage. So one of the benefits is predictable. I'm going to use Tim's word, which I use on Wall Street across any business discussion. The predictable risk management. I think that's job number one. I think the other aspect is, again, the other benefit is that efficiency and clarity of what's going in the P&L and what's on the balance sheet. And it's actually an integral part of how you think about your business, how you plan your business, and if you're a public company, how you talk to your business, about your business to the street and model your business to the street. And if you're private, similarly, depending on who your shareholders are and so on. So A, there is business benefit. B, there is stewardship benefit. C, there's financial benefit. And D, I think I underscore the point, it demystifies tax as sort of, a stepchild sitting on the side. It can actually bring it and make it an integral part of a business.
Tim, do you have anything to add to the primary benefits of this process of aligning the tax function?
Well, I think it provides clarity. You do need skills to get there. It's not a free opportunity. You have to earn your way in. So to echo what Ahmed said, I think it's presumed that you've got the compliance in order. On the technical, you need to distill it down so it's useful and actionable for people outside of tax to the extent they need to know. And that largely means refining your communication to something that's very digestible. So what I would say is effective communication requires work. The example I'll give you is we, not too long ago, briefed our board with all the news discussions about taxpayers not paying their fair share, and there's a number of news articles. I won't name the companies. You all probably are familiar with them. But in the last 2 years, a lot of companies have hit the press with very negative discussions about very low tax rates and very few people behind it. And our board wanted to know, well, my company has a mid-20% tax rate. Do we look like them? What's different? Why are we comfortable? And I drafted with 2 people in my department what turned out to be 3 different versions of the first draft, the second draft, and the third. We gave it to our CFO. He said, okay, this is still too much and it's too detailed. Distill it down. He actually had us do 3 revisions with his assistants, and he's a very effective communicator. He then forwarded to the CEO, and we had 2 more versions where we distilled it further down. And what I guess I'm drilling at is effective communication has to really focus on the core of the message. And when you're communicating technical, that's really critical. But to get to this last point, you then have to be a business generalist. You have to understand and open up your horizons and have more external focus, not only on how the business operates, which itself is humbling because it's not our main job, but you also have to be open to the external developments that affect tax policy and future tax law in anticipating for the business where the rules will be so that as the business evolves their organization design over time, you get to the right place where you're actually positioned well for that future world.
I think Tim did a good job of taking a chunk out of the next question that we're going to pose to him, but I'm going to still pose it and let Tim see if there's anything else he wants to add, because he talked about the skills needed and we moved into the whole communication style and then this whole concept of broader general business acumen and then political sensitivity to the tax policies that are going on. That question that I'm going to pose to you, Tim, is what are the primary characteristics that tax professionals need to possess in order to accomplish this alignment we're discussing?
Well, in addition to what I've laid out initially here, I'd also add you need to understand the value drivers of the business. And so there's actually a role that our tax functions play in transfer pricing documentation, which gives you a running start. The U.S. requires contemporaneous documentation if you're worried about penalty protection. There's probably 40 other countries that require some level of contemporaneous transfer pricing documentation. That means we need to do transfer price studies. You need to have interviews. Well, as you have interviews, you have an opportunity to learn. It's a legitimate part of the tax function to do this query where you try to understand how the business really operates, what activities are routine and what ones are potentially entrepreneurial or commanding higher returns. And that in turn starts to give you on the path to develop the business acumen to become a business consultant that knows tax instead of a tax person.
Tim, I've noticed in staffing these type of transfer pricing documentation roles that unfortunately they're not staffed with very senior level people, and those that I would say are already at that stage in their career think strategically. How are you adjusting that so that the people you're using to do these interviews are equipped and ready to take on more of that strategic analysis and educational process you just described?
Well, in fact, a couple of my direct reports are the ones that lead these exercises. We at P&G are in the process of restructuring over the last 2 years. We've had approximately 15 to 20% of the white-collar positions globally have been designed out of the system, and that affects your transfer pricing pretty critically. Well, because we have developed the investment to try to understand the business with senior leadership, we're actually invited into the discussions as the business talks about their new design before they implement. And we advise them of the optionality of what their decisions look like on an after-tax basis. So if you position it right, you staff it right, your influence perhaps could be more.
Ahmed, on this question, before we move to the next one, is there any points you'd like to add?
Yeah, actually, I would, and in fact, let me give it some context. So I'm going to answer the question as a layman, as an immigrant that grew up in the Midwestern part of the country in Michigan and got to live the American dream. And I would say that if somebody was asking me for advice on how to actually manage this, irrespective of what stage they are in their career, whether they are a junior person in transfer pricing that you were describing, or a chief tax officer, or any other, by the way, discipline. And I keep going back to the point to demystify the black box of tax. This is applicable to any part of business. And I would start with this. I think Tim gave you some very good feedback a few minutes ago that in anything you do in the journey of life, anticipation is far better than realization. And to be anticipatory, and in turn, while you're in tandem honing in your effective communication skills, you need cerebral curiosity. You need intellectual curiosity. And so when you take it down to whatever business you're living in, and again, it doesn't matter whether it's public, private, what vertical, what sector, what geography you're in, etc. I would take a little bit of time in your extra spare time and try to understand the addressable market for your space, whatever space you play in. Try to understand what is the competitive advantage you have, what is the competitive differentiator that you have relative to the competitive landscape. What's the legacy? Where have you come from? That's always very important. You've got to understand the past to bridge the present and anticipate the future. What are the current business drivers? So whether you have access to your CFO or you don't, or your CEO, listen to, if you're a public company, to the earnings conferences. If you're private, I'm sure there are town hall meetings or some other venues of communication, CEO newsletter, or whatever it may be. Listen to them and see what's actually going on in the business. And then also what triangulates into the future of your business. And you put all of that in the blender and you come back and say, okay, now let me put it and translate to what's going on in the tax world, which in it of itself has a tremendous amount of complexity. Work together as a team and with your CTO to effectively evolve a plan that is compliant and that you can digest in an elevator speech, so that whoever you're speaking to on the management team, being a line business person or the CFO or both, it's succinct, it's clear, and the obvious value is there, and it's obvious that the risk is also being managed. And that hones in on your understanding of the business, your ability to be a more effective communicator, but quite frankly, it makes the journey a lot more fun because you're part of a bigger thing versus just focusing on the task of the day.
Those are excellent points, and I'm hoping that the chief tax officers and the tax professionals listening to this listen carefully, and hopefully the financial leadership that has tax reporting to them is absorbing what they should be expecting from their tax function going forward. I'm going to move on. We're running a little tight on time. I'm going to want to get the last two. Go right ahead, Ahmed. Excuse me.
Sorry, just one last point so that it's not missed. Again, as part of the demystification of all of this, the other constituents which we haven't talked about that are also important for a tax function to bring along for the ride, and that is, and Tim talked about it under the concept of stewardship, whether it's governing tax bodies, and of course they all have different drivers, different pressures depending on where they sit, et cetera. But I would also underscore the relationship with the independent audit firm. It's of dire importance that the audit partner and the team is always in sync with what it is you're trying to do. And they can be a wealth of knowledge for you because they see a lot of other businesses, a lot of other companies. They also see trends in terms of businesses and so on that can be helpful to your cause as you digest and come up with more effective communication. So I just wanted to underscore that that's an important venue as well.
And I would reemphasize that point. I have seen that consistently, that my most successful chief tax officers, as they've gotten into very tenuous, difficult situations, the relationships that they've developed, if they've been successful with the audit partner, the lead audit partner, have come back and paid huge dividends for them as I kind of reconstruct history here in my own mind. I think that's an excellent point. I apologize, we're running a little tight on time now. I want to jump into the next question that was posed for Ahmed, which is what can financial leadership, brethren like yourself who have tax reporting to them, do to help facilitate this strategic business alignment?
Well, so, I think we go back to accountability of leadership, and that is subjective and it comes in many forms. If you ask me personally, and I'm a person that makes a lot of mistakes, I probably made 2,000 mistakes this morning before getting on this webinar, but if I held myself accountable, I would say that it is part of my job to ensure that people understand where the business is going. And again, to demystify not just the tax folks, but across every element of any business that I'm running. So education, awareness, and also single-handedly focusing on 2 or 3 things that actually matter, and not majoring on minors. Meaning that given as one of the leaders in a business, giving clarity as to what the business is going to do, what we're focused on, and in the context of the tax function, I would take it to the next level. Mind you, my exposure to tax is from decades ago, so I'm not conversant. But I have enough to at least have a dialogue and encourage a dialogue to make sure that we're managing the risk, we're predicting, going back to Tim's choice of words, which I love, and at the same time that we are paying our fair share, but managing our P&L and balance sheet efficiently. So education, awareness, guidance, and where we see things derailing, as leaders, we have to step in and correct course. The challenge is when you're running a business, there are multiple things, and I already disclaimed that most of us have ADD. And then on top of it, oftentimes, whether it's because of the CTO or because of the perception of the function, the CTO being the Chief Tax Officer, not the Chief Technology Officer, by the way, which is the more often used term for the acronym, particularly the world I live in. But at any rate, coming back to the tax world, at the end of the day, it's also making sure that we, as in this case, as CFO, that I'm getting the most out of the tax function, and I'm guiding, and also making sure that we're staffed accordingly with the appropriate level of talent, and we're constantly evolving. Now, does every person have the time to do that at 100%? I would submit to you no, and in turn, I would turn the responsibility back on the Chief Tax Officer to make sure that they establish relevance to their CFO and their management team on a continued basis, in a digestible manner, and in a business relationship building manner, as Tim described it. And I think any reasonable executive will listen to somebody that's anticipating and that's looking out for the stewardship of the business, but also the results of the business.
The last question I want to pose to Tim and Ahmed both, because it falls in line with this concept of being predictive, anticipating, and trying to take somewhat of a crystal ball out right now and looking at what the tax professionals in the field should expect going forward in the future along this concept of alignment with business operations, or anything else you think they should be conscious of that's coming down the pike to get ahead of the curve. What recommendations would you have, Tim, to start off with, and then Ahmed, would you follow up?
Well, I would submit if you're externally focused, it was predictable that the transparency movement was a likely development. And it was reasonably predictable that business substance would be more prominent requirement today than it was 10 years ago. So I would say having a policy ear, a ability to synthesize a number of data points that maybe aren't obvious, but if you take the protests about Wall Street a few years ago at the financial crisis, it wasn't that hard to figure out that the next ricochet of that movement would be demands on corporate tax revenue. So I think reading current events has its place. I'm not saying you do that majority of your day, but you need to be thinking beyond just the confines of your discipline. If I look forward as to what's the next most likely thing to occur, I think our aging demographics in the U.S. and our difficulty in wrestling with trying to get greater revenue from an income tax type perspective, either corporate or individual, I think it's hard to tell you what day, but we will eventually, I think, have an indirect tax, a VAT type tax. So a future tax professional probably is going to need to have better transactional tax expertise than I developed in my 30-year career. At that period of time, it wasn't as critical as it will be. And part of that's because of globalization. A transaction tax, a goods and service tax, they're designed to be border adjusted. Therefore, they're not susceptible to globalization pressures the same way that an income tax is. And I would submit that's probably in our future.
Ahmed, would you take a last shot at this before we open up for questions?
Oh, you bet. You bet. So I thought Tim gave an excellent summary in terms of substantively from a tax perspective, how a tax professional should be thinking about. Let me go a different direction, and that is in building any career. I think the notion of keeping up with current events as well as business events and having the curiosity of where addressable markets are going, where business trends are going. What does it mean that big data is a phenomenon? Look at the cloud. I remember being on Wall Street in 2009 and people looking at me cross-eyed as to why I was talking about the cloud. Today it's here to stay. And it really is nothing mystical. The cloud is about deferring risk and translating to an operating versus a CapEx model. So that curiosity, I think, is pretty important. I want to underscore also another point, since we're concluding on talent, the value of mentors in all shapes and forms. I view Tony as a mentor, and he's been there for me through thick and thin over the years, and not necessarily just on tax matters or tax talent. So I can't underscore that enough. As you grow in your career, pick up a nice basket of mentors and always be curious to learn from their wisdom and what they've learned. And I think the other bit I would add to what Tim articulated in terms of substance, I keep going back to the fact that all of us are going to operate in a far more agile, far faster, more efficient world because of the technology revolution. So while some may fall asleep at the wheel, the world is passing by pretty quickly. So don't underestimate the agility and the efficiency expectation for tomorrow's business model, let alone today. And put all of that in a blender. Go back to Tim's earlier points about making sure that the stewardship is checked off, that you're thinking ahead for the business, and you're becoming and growing as a more effective communicator, which is an art, not a science.
And Tony, I'll just add, strategy is the hardest part of the job. There's no book that tells you what the future will be and what the necessary strategy for that future will look like. They don't summarize it in bullet points or in an email. You as a leader have to synthesize it when you look at the future, the data points that are out there, and you have to deduce, what does this mean? Where does it take us? That's by far the toughest part of the job.
And I think Ahmed's point, having good mentors help in some of those.
Good mentors can help, but I think at the end of the day also, when you collect a good basket of mentors, you'll learn that it's okay to fail. In fact, failure normally leads to success. And so accepting failure, accepting that you're going to have to make corrections in turn as as you deduce where you're going next, because it's an evolutionary concept. Every day you're going to wake up, things are going to change. And the winners are the ones that are thinking ahead, moving fast, constantly shifting, and doing so in a highly ethical manner, in a professional manner, and bringing people along for the ride, so it's actually fun.
Now, those are all great points. I'm going to ask Jody to jump in and just read us off the first question that's been called in there, Jody. Can you do that real quick before we wrap up here, and then we'll thank both Ahmed and Tim for all their time and effort here.
Absolutely, yes. Opening to the first question I have is directly for Tim. How do you recruit and develop staff who bring the same mindset to your tax function? And was P&G's tax function operating in this manner when you first arrived?
No. It's an evolution. I intentionally, when I came in, did not try to change things overnight, but my management style fits me and it fits the company I work at, but it's very collaborative. At the end of the day, as the function leader, I've got responsibility to make decisions and call things at my level. I expect my direct reports to make decisions appropriate to their level, and part of the art of working with a team is, over time, communicating what level decision authority you want them to lead on and make the decision and inform me. At what level do they need to collaborate with me and I need to make the decision? And quite frankly, there are decisions that I, in turn, will present and recommend a solution, but will not decide. It's a CFO or CEO decision. But as far as the how do you get talent, it depends a little on the corporate culture. My company, as Tony alluded to in the opening remarks, is largely promote from within. And I would say we have at least 50% of the people have worked almost all of their career at P&G. Probably half of the senior management has had firm experience of 10 years plus and or other corporate experience. So it's kind of a mix. I think as a leader, you kind of want to think of your department as a series of chess pieces, but potentially it's a multi-levered chessboard. And the trick of the leader is to find the right piece to play for the right part of the board and get the right people in the right seats doing the job. So you don't have to have everyone, in fact, you don't want everyone to look like you. You need a complementary set of skills. Some people will be technicians, some will be risk adverse, some will be risk cowboys. That mix, when you bring them together, if you can get collaboration, if you can get people to work together, the mix of those skills will actually give you probably a better risk-adjusted result than if you have any one type of culture that's monolithic throughout your whole group. So I guess what I'm saying is you have to be inclusive with your group so that they all feel they can play and contribute.
Jody, if I just may add a little bit of color to Tim's answer on this, and it's consistent with the theme I've tried to outline in this conversation. So when successfully recruiting the right talent, and Tim is right, it is subjective to that corporate culture, which also evolves, by the way, over time. But and this is a point that's often missed, I would highly advise the Chief Tax Officer, irrespective of what level of tax seniority, is to include cross-functional colleagues in the interview process. So if it's somebody that's senior and reporting to this Chief Tax Officer, it'd be great to make sure you've got some, presidents of divisions and, other business-oriented people as part of the interview process. And you can translate that down to more junior levels as well in parallel or in tandem. And the reason for that is, at the end of the day, you are going to raise the awareness of the tax function across the business self-servingly. But you're also getting a good read from the business side in terms of what works and doesn't work. And finally, you actually set up a relationship before the new person walks in. And there is nothing more beautiful than that. And this, again, I'm back to my demystification theme. This applies in any aspect of any functional in a business. The more you can get it crisscrossed from day one, the more mileage you're going to get, the easier navigation you're going to get. And most CFOs that are focused on cross-pollination, because they know that drives efficiency in a business, will probably tell you the same thing that I just did.
Jody, I think we got time for one more question probably. You want to pick the last one and put it on the table?
Absolutely. We'll direct this to both of you. What are the most important things for a head of tax to not do when it comes to the alignment you're referring to?
I don't usually think of the negative, but I guess you shouldn't presume things. It should be a dialogue. So the way I work with my CFO, I keep a list of open items, and we periodically schedule a meeting where it might be 15 minutes or a half hour, it might be an hour and a half, and I'll run through my list and he runs through his. Emergencies intervene, we do it more frequently, but when you have a regular dialogue with stakeholders, and that would include not just your boss, but as Ahmed alludes to, the other people that you work with that you need their help to be effective, it's very helpful to have a discussion with them, a periodic update, just what's going on, so they can help understand what things you're navigating. So don't exclude, for example, the controller, the treasurer, the business leaders, the supply chain leaders. Your network is more valuable the more you till the soil. So I think if you are well connected with where the business is going by having a regular update dialogue as the leader, I think you're better off. If you presume things, you'll be in trouble because eventually you'll have the wrong facts.
So in the interest of time, let me just focus on just a couple of incremental points. Obviously, I would generically say the don'ts are the antithesis of everything we discussed in today's webinar. But more specifically, the chief tax officer should not mystify the tax function as a stepchild in the business. It is their leadership accountability to demystify it as an integral part of the business and to lead and develop people that way. So I would say that's the first don't. The second don't is being more reactive as opposed to proactive. We keep going back to the word anticipation, and we've taken it multiple dimensions, whether Tim's focus on current events or me taking it to business trends in the addressable market. So as one of the primary don'ts is don't be inwardly focused and in turn drive your function that way. And by the way, we focus on the chief tax officer. That would be true of anyone in a tax function because everybody is a leader. And so maybe the final capping point is, at the end of the day, true success is building a department of business leaders with tax expertise as opposed to just tax experts.
Well, we're running out of time. That last point is the one that I hear most common request from my clients when I'm looking for tax leaders, whether they're number 1, 2, or 3, depending upon the size of the company. I can't stress it enough. They say exactly what Ahmed just pointed out. Give me great business people who happen to have an expertise in tax, but I need them to think like business people. I need them to be able to communicate like business people. Demystifying, keeping things simple, keeping it concise and short, substantive, on target, and a business person is curious, as Ahmed talked about earlier. They really want to learn and understand what's going on. They don't bury their head in the code. They look in a bigger picture of where things are at. They anticipate, predict, like Tim talked about, trying to envision where things are going. There's so much wealth in this webinar that was given to people. I hope people take the time to really listen and understand it. Tim and Ahmed, I cannot thank you enough for taking time. These are both some of the 2 most busy people I know, and to give back to the profession like they've done here, I cannot thank them enough. Thank you, Jody, for leading the conversation as well, and I wish everybody a wonderful day and take advantage of the information you were just given. If anybody has additional questions they would like to email us, and I will get feedback from Tim and Ahmed going forward with any answers. If there's anything pertinent, I'll try to consolidate those questions to simplify it for them. Thank you, everyone. Appreciate your time on this.
Thanks, Tony. It was fun.
Welcome, Tim. Take care.
Thanks very much. You too. Best of luck, everybody.